Welcome to Triage Cancer's webinar, Medical Bills, Tips, Taxes, Appeals, and Financial Help. I'd like to introduce you to our speaker for today. Amanda is a staff attorney at Triage Cancer. Prior to joining our organization, she spent more than a decade counseling seniors and caregivers about Medicare and related benefits, and she was also a certified New York State Health Insurance Assistance Program counselor. If you'd like to read more about Amanda, you can do so on our website.
Thanks, Sophia. To set the stage for the importance of the topics we're covering today, I'd like to start by mentioning a report published by the Kaiser Family Foundation last year. That report provides information about the 100 million adults in the United States who have medical debt. About 1 in 5 people don't expect to pay that debt off in their lifetimes. Medical debt isn't just an issue for the uninsured, it also impacts people who have insurance. And it's also more common among young adults, the elderly, and people of color. Medical debt can have devastating consequences. About 1 in 7 people report that they've been denied care because of unpaid bills, and much greater numbers report cutting down on basic needs like food and clothing in order to pay for their medical debt. Our goal today is to offer strategies for managing medical bills in order to try and minimize the expenses related to a cancer diagnosis. We'll also talk about how to appeal if your health insurance company says no. We'll talk a little bit about taxes. And then finally, we'll wrap up with offering some suggestions about financial assistance. Now, as a reminder, before you even get to managing your medical bills, you want to try and reduce the number of bills that you get in the first place. And the best strategy that we have found for doing this, really the top way we have found to save money, is by choosing the most effective health insurance plan for your circumstances. Other things we found to be very important for saving money are understanding the terms that are used in your plan, using in-network providers if that is at all possible, and keeping track of where you are with respect to your out-of-pocket maximum so you can use it to your benefit. If you have questions about how to do any of those things, Triage Cancer has resources that can help. They include an animated video about how to select a health insurance plan and a worksheet we created to help you compare costs of different health insurance plans you're considering. This May, our monthly webinar will be about options when you lose health insurance at work. And if you don't want to wait for that, we have a recorded webinar called Understanding Health Insurance that you can access right now through our website. There are some strategies you can use to lower the cost of healthcare before you even receive it. I recognize that some of the people joining us today may be post-treatment, but these are tips that can be used for any kind of future care you need, whether that's a follow-up appointment related to cancer or even a non-cancer service. As with a lot of the things that we talk about, communication is key. People can feel awkward talking about money while also talking about their healthcare. However, it is absolutely appropriate to know what treatment is going to cost and to know whether there are programs that can help you cope with that cost. Healthcare is just about the only thing we purchase blindly. Imagine going shopping for a new car or a new vacuum cleaner and not asking how much those items will cost before you agree to buy them. I just have a hard time believing that anyone here today would do that. We need to normalize having these kinds of conversations with healthcare providers. Many hospitals have what are called ability to pay programs, and they offer discounts or they offer financial assistance. Unfortunately, hospitals sometimes don't do a very good job of telling people that the programs are available. We partner with a wonderful nonprofit called $4 that will actually help people find out if there's a charity care program available at their hospital and even help them apply. One other suggestion for helping with managing bills is asking your insurance company if they can assign a case manager to help you with the billing process throughout your illness. Now, keep in mind, these case managers still work for the insurance company. They don't work for you. However, it can be very helpful to know that every time you call the insurance company, you're going to be able to speak with the same person and that you're not going to have to start from scratch, retelling your story over and over again. Many people don't realize that you can negotiate with your providers before you get care. A hospital's billing department can help with this. Sometimes even a patient navigator can. When it comes to getting lab work done, not all labs charge the same amount. You can get a list of the lab work that you need, and then you can shop around for the lowest prices. The same goes for other tests that you might need. There's a website called healthcarebluebook.com, and when you go to it, you can enter your zip code, and it will give you the fair market value of various medical tests in your area. Another cost-saving strategy, if it's possible, group your appointments together so that you only have one copayment for an office visit. It's not always going to be possible, but you just don't know unless you ask. There also can be cost-saving opportunities when it comes to prescription medicines. So maybe you can take a less expensive generic drug rather than the more expensive brand name. There may even be a less expensive course of treatment for your diagnosis. If you never raise money as being an issue with your healthcare team, they're not going to know that it's a concern. Now, in no way do I want to suggest that you are choosing treatment purely based on money. You do want the most effective course of treatment, but sometimes there are options to having that and having it at a lower price. Another thing that's relevant to lowering your bills before you receive care is making sure you understand when you need a prior authorization. So a prior authorization refers to an insurance company requiring special approval before certain care can be provided. And the concept exists both for medical care and for prescription drugs. There are some challenges, though, that are associated with this. So first of all, it isn't always called the same thing. So if you see words like pre-auth, pre-certification, prior approval, advance approval, these all are referring to the same thing. They all have the same meaning. Also, most insurance companies don't provide a comprehensive list to patients of all the things that are going to require prior authorization. Once upon a time, it was only for the more expensive items, like a hospital admission or a surgery or a specialty tier drug. But nowadays, not only does it vary from plan to plan, but prior authorizations can sometimes be required for services that you might think of as being routine. Another challenge is it's not always clear to the patient who has the responsibility for getting the prior authorization. Sometimes healthcare providers will help patients with this. They'll facilitate the process, but if yours does, stay on top of the situation, because if your provider doesn't get the prior authorization, it is ultimately your responsibility, since you are the policyholder, to pay the bill. Unfortunately, we know of instances where even when someone receives prior authorization, it doesn't guarantee coverage after the underlying care is provided. We want you to know that you can appeal a denial of coverage after care is received, and you can also appeal the denial of a prior authorization. And we are obviously going to be talking about appeals in greater detail in just a short while. There are two medical billing terms that I want to make sure people understand, and they are surprise billing and balance billing. And sometimes people confuse the two. So I'm actually going to start at the bottom of the slide with balance billing. Balance billing is when a healthcare provider bills a patient for the difference between what the provider is charging them and what their insurance company has reimbursed. Balance billing doesn't happen if you are going to an in-network provider. It only happens with out-of-network providers. And that's because if you go and see an in-network provider, that provider has pre-agreed with your insurance company about how much they can charge you for a service. So a quick example, you go to a provider, they charge $100 for a service. The allowed amount by your insurance company is $70. If you saw an in-network provider or a preferred provider, they cannot send you a bill for that $30 difference. If you saw an out-of-network provider, they can. Totally separate from balance billing is surprise billing. That is in situations where an out-of-network provider sends a bill to you and you never realized that you were seeing an out-of-network provider, or you didn't choose that provider. So a couple of examples would be, you go and have surgery at a hospital, and the hospital is in your network, your surgeon is in network, but part of that surgery required anesthesia. And the anesthesiologist who was assigned to you, you didn't select them, it turns out they're not in your plan's network. Even though you didn't have a choice in selecting that doctor, they still send a bill after the surgery. That's a surprise bill. Another example would be you go to an imaging center in your health plan's network, you get some tests. The doctor who's assigned to read those test results is not in your health plan network, but then they send you a bill anyway. Another example of a surprise bill. And a number of states have had laws on their books protecting consumers in these situations. And a number of other states have had laws that provide partial protection, usually in instances where you've gone to an emergency room. In some good news, last year, we got a new federal law, meaning the law throughout the United States, called the No Surprises Act. And what this law did is it said that private insurance companies have to treat surprise bills from out-of-network providers who are covered by the law as if they came from in-network providers. So examples of situations that this new law covers: emergency services, non-emergency services at in-network hospitals, and transportation by air ambulance. I just want to note the emphasis on air ambulance because ground ambulances are not included. It is possible that an out-of-network provider can ask a patient to waive their rights under the No Surprises Act if the patient is getting non-emergency care, but waiving those rights is not allowed for certain specific services, which include anesthesiology, pathology, diagnostic services, and other instances where the out-of-network provider is the patient's only option. So, as with most new laws, and in the case of a law that's only a year old, it still counts as being pretty new. It can take some time for everyone who needs to understand the law to get up to speed. And the government recognizes that, and they have set up a No Surprises help desk with a toll-free number, as well as a way to contact them online. So if you have a bill that you think was not handled properly, you can reach out to them with questions. The reality is, unfortunately, even if you have adequate health insurance, and even if you're using it effectively, it likely isn't going to completely eliminate all of your medical bills. A lot of times, cancer survivors are left feeling like the guy in this cartoon. I can't endorse his coping strategy, but I can tell you I've had people say to me that this is the strategy they use. It's so stressful to open up these bills that they just let them sit and pile up. I can at least make some suggestions about things to do to hopefully reduce anxiety around these bills. Just as I talked about before with lowering bills before treatment, these are suggestions not just for bills for someone who's in their initial active cancer treatment. You can keep using these strategies during surveillance or follow-up care. In fact, these are tips I would say that all of us as consumers can consider using as we receive any kind of healthcare. So once you receive care, you're probably going to get a lot of mail. Maybe snail mail, maybe email. From your insurance company alone, you can get multiple pieces of correspondence about the same service. You might get a note saying the insurance company has received your claim, and then another note that they're processing your claim. The correspondence I'm most concerned with is the one called an explanation of benefits, or EOB. You can usually tell an EOB because somewhere in big letters, it's going to say, this is not a bill. And that's right, it's not a bill. It's a statement that's giving you an idea of how much you're going to have to pay out of pocket for a service. And EOBs are sometimes a challenge to understand. So this slide is an illustration of the types of information you might find on your EOB. Every insurance company is going to present the information in a somewhat different way, but they should all have a certain minimum level of information. So first, you have that telltale sign, this is not a bill. And then you have some general information about the policyholder and about who the patient related to this claim is. You'll get a summary of the claim, how much did the healthcare provider bill, how much did the insurance company approve, and how much does the insurance company say they think you owe. And then you get more detail. You'll get usually a date of the service, a description of the service, billing codes. We're going to get some breakdown of what was billed and what was and wasn't covered, as well as a breakdown of how the insurance company is looking at these amounts. Were they part of your deductible? Were they co-payments or co-insurances? And what didn't they cover? And finally, a good EOB should tell you somewhere to date how much you have paid towards your deductible for the year and how much you've paid that they have applied to any out-of-pocket maximum. And as I mentioned earlier, keeping an eye on that out-of-pocket maximum can be really helpful. That's because once you've satisfied your out-of-pocket maximum, any additional covered healthcare services you receive during the year should not have any out-of-pocket costs associated with them. Now, that was a lot about what the insurance company is telling you after you get a service. The other party that's going to send you mail after you get a service is your provider, the hospital, your doctor, your lab, the physical therapist. And what they're usually sending is the bill. And in our experience, providers are often faster at sending you a bill than insurance companies are at sending you an EOB. And that's why it's critical to keep track of your paperwork. If you end up paying a bill before you see the EOB, you could end up paying more to your provider than you actually owe. And then you're in a situation where you have to go back to that provider and ask for money back, which usually becomes a headache. So if it's at all possible, we encourage people to wait until they get their EOBs before they pay the corresponding bills. But tell your providers that that's what you're doing. So don't just wait, have a due date come and go and never say anything, because then you're in a situation where the provider thinks you're just not planning to pay. What I have done in these situations is I'll call and I'll say, listen, I haven't gotten my EOB yet. Can you please push back my due date, or can you make a note in my file? Once you have both the bill and the EOB in your hands, you can then check them both for accuracy. So medical billing is a human process and people make mistakes. So it's important to be sure that you are being billed for the services that you actually receive. Don't be afraid to call and ask for clarification if you see codes all over these forms and you don't know what they mean. There are also some internet resources out there to help you understand the codes. Medical bills, as I'm sure many of us know, keep arriving long after treatment is over. If you have a lot of bills and you don't feel like you can handle them, and you don't have a friend or a family member who's available to help you, another option is contacting a professional bill reviewer or a medical claims organization. These companies will all charge differently. Excuse me, some of them will charge initial fees. Others will just charge you a percentage of whatever they're able to recover. I'm not endorsing any of the services in particular, but I do just want to make sure that you know that they are out there. It is critical to dispute bills if you have problems. And if you think a procedure or a treatment that you received should have been covered and it wasn't, know that you have the right to appeal that decision. Which brings us to our next section of this webinar, which is information about the health insurance appeals process. One of the things that we think is incredibly helpful for people to understand is you don't have to take no for an answer if your insurance company has issued a denial of coverage, sometimes called an adverse benefit determination. Claims get denied all the time. We actually have one study that showed 14% of all submitted medical claims are denied, which at first glance, you might say, okay, 14%, that doesn't seem unreasonable. But then you find out that that amounts to more than 200 million claims each day. It is a staggering number. The appeals process requires patients and caregivers, excuse me, in the middle of dealing with everything else that comes with a cancer diagnosis to take on yet another obligation. But we have some data that tells us somewhere between 40 and 60% of all the claims that get appealed end up being decided in favor of the patient. So roughly speaking, we could say that around half the time when an insurance company says we're not going to cover this, they're getting it wrong. Now, the first step in the appeals process is figuring out what type of health insurance plan you have. And by this, I don't just mean what company issued your plan. I'm not just saying, do you have Aetna or United Healthcare or Cigna? I mean knowing how you get your insurance. And that's because the details of the appeals process don't just depend on who your insurance company is, but on how that insurance is provided. So did you buy a plan through your state's marketplace? Do you have a plan through your employer? Do you have Medicare or Medicaid or something else? There are going to be somewhat different steps depending upon which of those categories you fall into. I'm going to share a little bit about the process for a few different categories of health insurance. And the first category is for those who have individual health insurance or a funded group health plan. So when I say individual health insurance, I mean a plan someone has purchased on their state's marketplace. Some people think of that as purchasing it on the exchange, or some people say Obamacare. And then when I say a funded group health plan, when you get health insurance through an employer, it can be either funded or self-funded. And I am going to take a moment to explain the difference. So a funded or insured employer-sponsored plan is where an employer purchases health insurance for its employees from a health insurance company. The employer and the employees each pay a portion of the premiums. And then when an employee has a claim to submit, they submit it to the health insurance company, and the health insurance company pays it or doesn't pay it, as the case may be. A self-funded or self-insured is a plan where the employer pays directly for the costs of its employees' healthcare. It's possible the employee also may contribute some money towards those costs. Often, an employer is going to contract with a third-party administrator to manage its self-funded plan. And this is confusing, but usually those third-party administrators are health insurance companies. I would say that most of the time when I speak to someone, they don't know off the top of their head whether they have funded employer-sponsored coverage or self-funded coverage, and that's okay. It is a question that they can ask. So you can either go to your HR department or your benefits department and ask at work, or you can call the telephone number on your insurance card and ask the insurance company. One more wrinkle. If you have a group health insurance plan that was issued to your employer prior to the passing of the Affordable Care Act, so all the way back before March 23rd of 2010, if that plan has not made substantial changes since then, it's considered grandfathered, and then it's not subject to the rules that I'm going to talk about. So let's circle back. That was a lot. We're back in that first category of appeals information, and that is for people with individual plans that were purchased on the marketplace and for funded employer-sponsored group plans. You can file appeals both before and after medical services are provided, and that process is going to look slightly different. In other words, if you're appealing the denial of a prior authorization or you're appealing post-care. Generally, there are two types of appeals, internal and external. An internal appeal is basically going back to the insurance company that said no and asking them to reconsider. In many states, people are required to exhaust their plan's internal appeals process before they can ask for an external appeal. An external appeal being you go out and you ask an independent entity, excuse me, to review the insurance company's decision. And usually you have to exhaust the internal process first, unless there's an extraordinary circumstance. Each company is going to have a different internal appeals process. You as a policyholder have to follow their process to the letter, follow all the deadlines, follow all the instructions about procedure. If you aren't sure what your company's process is, you can call the company and you can ask for a copy of it in writing. I will also say that usually in your denial letter, they will include information about the appeals process there as well. For situations that are not urgent, you file what's called a standard appeal, and you can do that within 180 days of getting your denial. If you are appealing a pre-authorization denial, then the health plan has to give you an answer in writing within 30 calendar days. If you are appealing denial of coverage post-treatment, the health plan has to give you an answer in writing within 60 calendar days. You can also file what's called an expedited or urgent appeal. And you can do that if you have not yet received treatment or you're in the middle of treatment and your healthcare provider thinks your condition could involve imminent or serious threat to your health. In an expedited appeal situation, the health plan has to give you a response within 72 hours. Also be aware, if you ask for an internal appeal and then you lose again, there can sometimes be a second level of internal appeal to go through. Once you exhaust your internal appeal opportunities, thanks to the Affordable Care Act, you have the right to ask for an external appeal. And just like with prior authorizations, where there are a bunch of different words that mean the same thing, there are a few ways to refer to external appeals. So if you see words like independent medical review or IMR, or external medical review or EMR, those are all referring to an external appeal. Every state has a process for external appeals. If you have an individual plan that you bought on your state's marketplace, that plan has to follow the rules not just of the Affordable Care Act, but it has to follow state laws. And if you have an employer-sponsored plan, in most cases, in addition to having to follow the rules of the Affordable Care Act, that plan is going to have to follow another federal law called ERISA. External reviews are conducted by independent entities. Again, they have a few different ways of referring to themselves. Sometimes they're called independent entities, sometimes they're IMROs, sometimes they're IREs. States have the option to either use a federal process for this or their own state health insurance agency's process. And you can find out which one your state uses on our state resource pages. Depending upon which one it is, it's either free to ask for an external appeal or there is a $25 fee. Really important to understand, the independent review entity's decision is binding. So let's talk a little more about these external appeals. What do they look like? Well, first, you file a written request for an external review within 4 months of the date that your insurer sent you its final decision. Excuse me. Then you get a decision back from the external review entity no later than 45 days after the appeal is received, unless it's an urgent situation where, again, you can get an answer within 72 hours. It is possible in some of these urgent situations that you can actually file your internal appeal at the same time as the external appeal to really speed up this process. Now, there are certain reasons that you can ask for an external appeal. You can ask if the denial you got involves medical judgment, where you or your healthcare provider don't agree with the health insurance plan. You can ask in situations where the denial involved the insurance company saying that they think the treatment you requested is experimental or investigational. And you can ask for it if your coverage was canceled based on your insurance company claiming that you gave false or incomplete information when you applied for coverage. And again, just to emphasize, that external reviewer is going to give a final decision. They're either going to agree with the insurance company and say, yes, when they said no, we think that was the right call, or they're going to reverse that decision and decide that the insurance company should have covered your treatment. And by law, the insurance company has to follow whatever it is that the independent entity decides. Now, that was process around individual health insurance and funded group health insurance. I'm going to talk a little bit now about the appeals process for the other type of employer-sponsored health insurance, which is self-funded plans. And most of those have to follow a federal law called ERISA, which stands for Employee Retirement Income Security Act of 1974. ERISA preempts state insurance regulations, which just means that if you're an employer with a self-funded plan, you most likely don't have to follow your state's insurance laws. The appeals process starts out pretty similar to the process I already talked about. You submit a claim, In this case, it's your employer who denies coverage. The first step is you go back to that employer and you ask them to reconsider. You may be dealing with the employer. You may be dealing with their third-party administrator. If you have exhausted the internal appeals process for your self-funded plan, you have the right, again, to an external review. And the self-funded plan either has to follow a federal external review process or it can choose to follow their state's process. Excuse me. Again, just like in the funded plan situation, the decision of the external review entity is binding on the plan. However, this is where things start to look a little bit different from the funded plan situation, because if you lose your external review, you can now sue in federal court. Now, in this kind of case, when you sue, what you're able to recover is usually the benefits that were due to you under the terms of your plan. You can enforce your rights under the terms of the plan. You may also be able to clarify your rights to get future benefits under the terms of the plan. But when I talk about recovering the benefits due to you, an example would be you sue because you were denied a $200,000 surgery. If you are able to win, you can recover the $200,000. But while some courts might let you collect interest or attorney's fees, it's not a guarantee. So it can cost a lot of money to do this. You can end up losing, or even if you win, you still may be out additional money that you had to spend to enforce your rights. This chart goes through the steps that I just described. I want to just note that if you like these charts and visual representations, all of this is available in our cancer finance. So once you understand the process for the appeals for your type of plan, the next step is really understanding why your insurance company said no. So in the letter you get from your insurance company, it should give you a reason why it's issuing a denial. And that reason is going to help you figure out what to do next. There are a number of reasons that are common for denials. They range from administrative reasons, like something was coded improperly, or there's factual information that's wrong. Someone hit the same key twice. So instead of being billed for 2 lab tests, you're being billed for 22. Maybe your plan is saying something you received wasn't a covered benefit. Maybe it's saying you saw an out-of-network provider and your plan doesn't provide out-of-network coverage. In the cancer context, the denials that we hear about most often concern treatment not being medically necessary or being experimental or investigational in nature. We also see denials of coverage for medications when a plan claims that the use of a drug is off-label. So an example of this would be you have a patient with lung cancer. Her doctor prescribes her a medicine that was originally designed to treat colon cancer, but it's shown some success in patients with lung cancer. Even though her insurance company covers that colon cancer drug, they deny coverage because they claim that it's being used off-label in terms of treating someone with lung cancer. That patient can appeal that decision. Another reason I want to mention that can be common for denials is something called coordination of benefits. That term refers to rules that exist for when someone has more than one type of health insurance coverage. So there are rules for, in those instances, which plan has to pay first, which plan pays second, sometimes which plan pays third. Insurance companies and providers are not always aware when someone has more than one type of insurance. It is really important that if you do, that you let your healthcare providers know and that you tell each of your insurance companies about the other one. So if you, for example, have coverage through your own employer and through your spouse's employer, or maybe you have Medicare and retiree coverage, your healthcare providers need to know that, and the insurance companies need to know about each other. Once we understand why a claim was denied, if that reason is medical in nature, so if the denial was because the insurance company is saying something wasn't medically necessary, or it was experimental or investigational, or if it was an off-label use of a drug, it is critical to get your healthcare provider involved with the appeals process. Your healthcare provider can write a letter of support that describes the medical reasons that you need to receive that care. Your healthcare provider can help you with submitting test results or information about procedures that are related to the requested care. They can supply or they can point you towards how to get copies of things like current medical literature or studies that document the medical effectiveness of a service, for example, that your insurance company is saying is experimental or investigational. They can point you towards peer-reviewed articles from professional journals or magazines that support the treatment that's being recommended. Also, you yourself can submit a personal narrative, excuse me, that describes your need for the requested service. So in gathering medical records, there can sometimes be some hurdles, and there just are hurdles in the appeals process overall. It can be tough if you have gotten treatment across different hospital systems or in different states. It may be challenging to gather all of the medical information related to your situation together. But most of the time you are going to need all of that for an appeal. We do have a quick guide that we put together with some tips about accessing medical records. We also have a partnership with an organization called Citizen. And I'm just going to point out the 2 I's after the C are intentional. That's how they spell it. Citizen serves certain specific populations. So if you have a diagnosis that is listed on this slide, they will work with you. And for free, they will gather all of a patient's electronic medical records and provide a summary sheet. So that can be a really good resource if someone is really struggling to get this information together. This flowchart is a visual illustration of all the different steps that I've talked about in the appeals process. So specifically, this one is for an appeal post-care. The left side of the slide walks you through the best case scenario. You have a claim. It was immediately approved, it was paid. The right side of the slide shows all the different pathways a claim can take if your initial request for coverage is denied. And this slide is similar, but it's for an appeal of a pre-authorization. If you are starting to wonder at this point, with so many boxes and so many arrows and all the different colors, how are you possibly going to keep up? I just want to make sure you know you're not alone. So we understand that all of these steps and all of these to-do items can be confusing. And one of the things that we've done to try and help is create an appeals tracking form to try and help you stay organized. You can download the form from our website. I like this form better than just using a blank sheet of paper because it prompts me to remember all the different things that I might want to be keeping track of, like dates and deadlines and asking about when someone is going to get back to me and details or notes of important conversations I'm having. I know that a lot of people like the Post-it note method, especially with all the different colors. If you are like me, you are going to put a crucial piece of information on one of those Post-it notes. And then when you most want that information, you will not be able to find that note. I can't overstate the importance of staying organized throughout this process. When I talk to people, I like to encourage them to keep a notebook together with all of their medical and insurance paperwork. And to jot down each time you have a telephone conversation or if you have an in-person conversation, to take down the name of the person you're speaking to, the date and the time, and then the highlights of what they have said. And I like it in a notebook because then all of the notes have to be together. So if I am calling the insurance company and speaking to somebody new, and I know that I got different information from the person I spoke to there a few weeks ago, I can flip back through that notebook and I know somewhere in it is the information about the previous conversation. I would also say that staying organized is one of those opportunities where maybe you can delegate to a friend or a family member. You know, a lot of people have people in their lives who reach out and They want to know what they can do to be supportive. Well, maybe they can help you with some of the paperwork. Or maybe they can be a second set of ears on a telephone call where if you're finding it difficult to keep track of what people are saying to you, you have a backup then of someone else who can take some notes and maybe get some of the facts that you might be missing. Another hurdle in the appeals process is something called peer review. That's part of the internal review process, and it refers to an insurance company having its own healthcare professional talk with your provider. So, for example, the insurance company may have a doctor who works for them talk to your oncologist about whether a particular procedure is medically necessary. There's a few challenges with that. The first is a lot of times the things that are the subject of an appeal are really specialized medicine. And the doctor in the insurance company may not have the same specialized knowledge and experience that your provider has. So it can be helpful for your provider to ask that they speak to another physician with the same specialty. So for example, if you were seeing an oncologist, asking that they speak to another oncologist and not just an internal medicine doctor. There also can be a challenge in that people sometimes get confused and think peer review is the same thing as an external review. It really isn't. So even if you have done a peer review and an internal appeal, you still have that right to an external appeal. The final hurdle that I want to highlight is knowing about the appeals process in the first place. We know that roughly half the time when an insurance company is saying no, they're getting it wrong. Here's the problem though. Consumers are almost never appealing their denied claims. So in this graphic, that tiny white sliver represents 0.1% of, in this case, more than 48 million denied claims that were actually appealed. So when we talk about issues like access to care and the negative financial impact of a cancer diagnosis, appeals are this hugely underutilized tool for trying to reduce cost. So just to summarize where we are so far, once you understand why your insurance company has said no, you want to go ahead and gather evidence, and you want to pay close attention to all the rules and the deadlines for submitting your appeal. You want to remember that external appeals exist, and also that the right to expedite an appeal exists. You want to stay organized, persevere, don't give up. Also, we know that the appeals process is frustrating and that talking to insurance companies is frustrating overall. And you might be pretty angry and upset when you actually contact your insurance company. I would just offer that sometimes if you can stay calm and polite with whoever answers the phone when you contact the company, you can try and remember like your mom's voice about remembering the golden rule of treating others the way you want to be treated, that can sometimes really pay off. You want the person on the other end of the phone to want to help you. They are likely not the final decision maker in this process, but they are a gatekeeper, and they can be really helpful if they want to be with getting you to the right person to talk to in the company, or with maybe locating information that you've been having trouble finding. So far we talked in some details about individual health insurance and about employer-sponsored plans, but a lot of people don't have those types of insurance. There are certainly a number of other types of health insurance plans out there. If you have any of the plans listed on this slide, a self-insured student plan, a church plan, a plan through the Farm Bureau, or a health benefit plan, or if you participate in a healthcare sharing ministry, all of those types of plans and programs may not be required to follow any of the state or federal rules that I've already talked about. If you have one of these types of insurance and you don't agree with the determination that you've received, the best next step is probably contacting your state's Department of Insurance and asking for information about what, if any, recourse you may have. I will be honest, from what we have seen with a lot of these plans, recourse may be limited. And so often we do suggest that if this is the kind of health insurance you're using, or maybe you have a patient who's using, it could be a good idea to consider whether you have the ability to purchase a different kind of insurance. Medicaid program has its own appeals process. Medicaid is the government health insurance program for people with limited incomes and sometimes limited assets. Every state's Medicaid program is specific to that state, but all the programs do have certain things in common. A Medicaid denial is known as a notice of action. You may get a notice of action if you're being denied coverage for a service, but you also may get a notice of action if you're being told that you're not eligible for Medicaid or that you're not eligible for Medicaid anymore. So you can get one if you are being taken off of the Medicaid program. And I want to highlight that right now because the Medicaid program is about to begin unwinding the roughly 2-year period of continuous Medicaid enrollment that came about due to the COVID-19 public health emergency. If you receive a notice of action, you can appeal. And that's in the Medicaid context, that's requesting a fair hearing. You have 90 days to do it. However, if you act fast and you make the request within the first 10 days, then you will be able to continue receiving benefits while your review is pending. One other thing I want to highlight with Medicaid appeals is that sometimes your local legal aid office may be able to help you with them. When it comes to Medicaid, there are 2 main ways that people receive Medicaid, and states may offer one or both. The first way that people can get Medicaid is called fee for service. Under that model, the state pays healthcare providers directly for the different services that someone with Medicaid is receiving. The other type of Medicaid is managed care Medicaid. And under managed care, the state is paying a fee to a health insurance company for each of the people on Medicaid who enroll in that plan. And then the insurance company provides all of the Medicaid services. It's very similar to commercial private insurance. Often these are HMOs or they're PPOs. I'm highlighting that because the specifics of the appeals process are going to look different depending on whether you have fee-for-service Medicaid, in which case, if you get a notice of action, you immediately request a fair hearing, or if you have managed care Medicaid. In that case, the first step when you get a denial from your plan is in fact going to be an internal appeal with that plan. And then if that doesn't result in a decision that you want, you'd move on to requesting a state fair hearing. Medicare also has its own appeals processes. Medicare is the federal health insurance program for people who are age 65 and older and for certain people who are disabled. In the Medicare world, an EOB is known as a Medicare Summary Notice, or MSN. Just like in the private insurance context, Medicare can deny claims for a variety of reasons, including, I'll just highlight, coordination of benefits issues. Medicare has its own set of rules about what you do if you have Medicare and some other kind of coverage. And Medicare also has special procedures to follow for expedited appeals. In particular, if you think you are being discharged from an inpatient hospital or a skilled nursing facility too early. The details of the appeals process are going to depend on a number of things. First, whether someone has original Medicare or a Medicare Advantage plan. Sometimes people think of those as Part C plans. If you have an Advantage plan, you're going to have to follow the process laid out by your plan. If you have original Medicare, you can see the 5-step appeals process on the slide. The first step is actually pretty simple. It just involves asking Medicare to reconsider its decision. In the case of Medicare, that's done through an organization that Medicare uses to process these requests. That's called a MAC, or a Medicare Administrative Contractor. Also, if you have original Medicare, if you have a Medicare Part D prescription drug plan, again, that's a private plan. And so if you want to appeal a denial from them, you have to follow the rules laid out by the plan. I want to emphasize one more time the importance of actually going through the appeals process if you get a denial. So this is another Kaiser study. In 2021, 35 million requests for prior authorizations were submitted to Medicare Advantage plans. Now, those plans approve the vast majority of the requests. They only deny 6% or so, which seems really small until you realize that 6% of 35 million is 2 million. So that's a lot of denials. Of the requests that are denied, only around 11% of people appeal. So close to 90% of people take no for the answer. But 212,000 appeals are filed and move forward. And of those 212,000, more than 173,000 are overturned. That is more than 80%. In fact, Kaiser broke down their data based on insurance plan. Some of these plans were overturning closer to 90% of the denials. So taking that time to file the appeal yielded real results. Most people won, most people succeeded in getting their plans to authorize the care that they were asking for. So again, I know the appeals process is complicated. It can be super confusing. I really do just want to remind you that we have a lot of resources that can help you out. We have a whole module about health insurance appeals on our cancer finances tool that can walk you through process for all these different types of health insurance. It is super important as you are staying organized, also keep all of your healthcare records in one place. Hang on to all of those EOBs, hang on to copies of prior authorizations. There are actually reasons other than the appeals process to do this. One of which is coming up in April, or actually, I guess we're already in it, which is tax season. Tax filing will be in April. This is a good time to point out that one of the reasons to keep all these records is in case you have unreimbursed medical expenses, because those may be tax deductible. And I am going to talk in more detail about that in just a few minutes. I do want to let you know about another relatively new resource we have, which is our medical bills tracker. This is really good for situations where your EOB might not clearly be telling you where you are in terms of meeting your deductible and out-of-pocket maximum. You can download this from our website. It opens as a Google Sheet. And then at the top, you can fill in your deductible and your out-of-pocket maximum. At the bottom, you can log each of your individual medical bills. And as you put in the amounts, the worksheet will automatically track for you where you are in terms of meeting your deductible and your. I want to note a consumer-friendly action that was taken by the big 3 credit reporting agencies last year. As of last summer, paid medical collection debt is no longer going to be included on people's credit reports. And the time period before unpaid medical collection debt appears on those reports was increased from 6 months to a year. This year, medical collection debt under $500 is no longer going to go on credit reports at all. And these changes alone are said to be removing nearly 70% of medical debt from credit reports, which we think is a great step towards helping people out. Now, if you end up in a situation where you do owe your healthcare provider money, try talking with them. We suggest doing it before they turn over unpaid bills to collection agencies. You can ask them if you can't make a payment for more time. You can see whether they'd be willing to negotiate a payment plan or take a lower lump sum payment. These are things you can try negotiating with other kinds of creditors also. It is not the case that all creditors are going to be flexible, but some are. And the motto that we like to think of is, it can't hurt to try. So I want to turn our attention to taxes right now. Many of us are required to file tax returns, both with the federal government and with our state. State rules vary, so I'm going to just focus on federal rules. And I just want to emphasize at the onset, no one at Triage Cancer is an accountant. If you do have questions about your personal tax situation, the best place to go is to a tax professional like an accountant. So generally, most US citizens and permanent residents who work in the US have to file a tax return if they make more than a certain minimum amount of money for the year. That amount varies depending on marital status, how you're filing, and age. I gave a few examples on the slide. And the amounts you see refer to gross income. In other words, all the income someone receives, whether it's earned or whether it's unearned. Earned income is associated with a job, right? So it's things like salary or tips or bonuses. Unearned income is income not associated with a job. So things like interest or dividends from investments or maybe rental income. Two other tax terms to understand refer to different ways to reduce what you're going to end up paying in taxes. And those terms are deductions and credits. When we talk about deductions, those are amounts that reduce how much income you get taxed on. So if I make $100 and I have $10 in deductions, I'm going to be taxed on $90. There are standard deductions, which are set dollar amounts that the IRS has told people they can deduct if they fall into certain situations. And then there are itemized deductions, where the amount you're deducting is specific to your situation. And whether you are using standard deductions or itemized deductions, all of that is going to totally depend on your own situation and the year that you've had. Now, credits reduce the amount of taxes someone owes. So if the IRS determines you owe $1,000 in taxes and you're entitled to a $500 credit, now you only have to pay $500. In addition to seeing whether you have to file taxes because you've earned the minimum that's required, there are some other circumstances where you're required to file taxes even if you didn't earn more than that threshold amount. These situations include if you've had earnings from self-employment, if you've received distributions from a health savings account, if you owe taxes on certain types of tax favored accounts. The situation I really want to highlight here is if you've received advanced premium tax credits through the health insurance marketplace. Remember, those are the credits that help you lower the cost of monthly premiums for marketplace insurance. To get those credits, you had to estimate your income for the year before you knew what your actual income was. So now at tax time, you're required to reconcile your estimate against what you actually earned. If there's a difference, it impacts the taxes you owe or the amount you get as a refund. If you got premium tax credits last year, you should have received what's called a Form 1095-A in the mail last month. If you didn't, you can call your state marketplace and ask what happened. There are very specific instructions for how to use the information on that form to complete the tax forms you now need to submit. There may be situations where even if you don't have to file a tax return, you decide that you want to. That could be because there are amounts that you prepaid that you can get back. It could be because you're eligible for a different kind of tax credit or one of the different kinds of tax credit. They include things like the earned income tax credit, which is a refundable tax credit for low and moderate income workers. That credit doesn't just cut the amount of taxes you owe, it could get you a refund. There is a child tax credit that is available to taxpayers with dependent children under age 17. To claim that credit, you have to show the IRS that you and your children meet certain specific criteria. You also might be eligible if you paid for college in the last year to claim the American Opportunity Credit or the Lifetime Learning Credit or the tuition and fees deduction. I mentioned earlier keeping track of unreimbursed medical expenses. You can deduct qualified unreimbursed medical expenses, provided that they total more than 7.5% of your adjusted gross income. To see whether you are eligible for this deduction, you have to know how much money you made and how much money you spent. And if you want to take advantage of it, you have to itemize. The IRS has an entire publication devoted to the rules around what expenses are and are not deductible. I'll note that the IRS says medical expenses as a term includes dental expenses, and they have a very long definition of what the term medical expenses means. I'm going to give you the short version, which is it's the costs of diagnosis, cure, mitigation, treatment, or prevention of disease for any part or function of the human body. It includes services you receive from doctors and dentists and other medical practitioners, and it also includes costs of things like equipment and supplies. You can usually include your own medical expenses or expenses from a spouse or a dependent, but there are detailed rules around this. And it's IRS publication 502 that can give you these examples. A few things just as a sampling, some things that are included: premiums you pay for your insurance, amounts you pay for transportation to get to your medical care, ambulance services, hospital services, some costs of lodging if you're away from home and you're getting treated at a hospital. Certain medicines can be deducted, certain long-term care services. Some of the things that can't be deducted: non-prescription drugs and medicines other than insulin, vitamins and nutritional supplements, unless your healthcare provider recommends them to treat a specific medical condition you've been diagnosed with. And that is because in general, you can't deduct the cost of things like vitamins and nutritional supplements because they are thought of as just being or maintaining ordinary good health. You also can't double dip. So if you used money in a flexible spending account or a health savings account to pay unreimbursed medical expenses, you don't also get to deduct those from your taxes. As a quick review of what these programs are, they are both programs from the IRS that give people tax advantages to offset the costs of their health care. For health savings accounts, those are only available if you have a high deductible health insurance plan. In 2023, you have a high deductible plan if you have an individual plan and your deductible is at least $1,500 and your out-of-pocket maximum is at least $7,500. Or if you have a family plan and your deductible is at least $3,000 and your out-of-pocket maximum is at least $15,000. The IRS tells you the maximum that you can contribute to this plan. You can establish the plan on your own through a bank, or you can do it through your employer. And then you can use the pre-tax dollars that you contributed and spend them on qualified healthcare expenses. Those are usually the same expenses that would qualify for the medical expenses deduction that I just talked about. Usually, not always. So you can use your HSA to pay for things like deductibles and copays and coinsurances, but you typically can't use it for premiums, although there are some exceptions for that, including premiums for long-term care insurance and for COBRA. If you don't spend all the dollars in your account one year, they roll over to the following year, and the accounts are portable, so they stay with you if you switch jobs or you retire. A flexible spending account is another type of tax-advantaged account. It's basically a savings account where you can save pre-tax dollars and spend them later, again, on qualified healthcare expenses. An FSA is only available with employer-sponsored insurance. You can't open it on your own. Again, the IRS will tell you the maximum amount you can contribute. The IRS determines what you can and can't use those amounts to pay for. In contrast to the HSA, if you don't use the funds in your FSA during the year, they don't roll over. But your employer has the option to either give you an additional grace period or to let you roll over a certain amount of money. This year it's $610. FSAs are not portable. Your employer owns that account. So make sure if you're thinking of leaving your job that you try to use up all the money in yours before you do that. Tax day this year is April 18th. You can file, as most people know, electronically or by snail mail. Some people use professionals to help them. Some people do it themselves. I want to just highlight a couple of the places you can go if you need help at no cost. The first two of these, VITA, the Volunteer Income Tax Assistance Program, and TCE, Tax Counseling for the Elderly, are programs managed by the IRS, but they're operated by partners, they're staffed by volunteers. They provide free basic tax return prep for people who are eligible. Usually for VITA, you have to make $60,000 or less, or be disabled, or be a limited English speaker. TCE focuses on people who are 60 years old and older. AARP Foundation Tax Aid is another great free in-person and virtual tax assistance program. It's open to anyone, although their focus is people who are over 50 and who have low to moderate incomes. You don't have to be an AARP member. There are volunteers nationwide, and they are trained and they are IRS certified so that they understand the latest changes and additions to the tax code. The last service on there, the Taxpayer Advocate Service, is actually not a tax prep program. It is an independent organization within the IRS, and it has advocates who can help people who have tax problems that they are unable to resolve on their own. Regardless of how you file, make sure you keep records that you've done it. Make sure you keep backup for deductions. The general rule is to keep things for at least 3 years in case of a potential audit. So I want to spend our brief remaining time today talking a little bit about financial assistance, because even when someone is doing their very best to minimize expenses, there can still be situations where there's not enough money to pay all the bills, and more people than we'd like seem to find themselves in these situations. We have a lot of different resources to help people with financial assistance options. One of them is our Cancer Finances tool, where we have a specific module about financial assistance. This module has information about many of the private programs that are out there that provide grants to people or to families impacted by cancer. Each of the private organizations will have its own mission. Some are focused on helping people in a certain geographic location. Some are diagnosis focused. Some will focus on young adults or on single moms or families of a child with a diagnosis. It varies tremendously. Because organizations are private, they each have their own criteria for eligibility. Many require that people be in active treatment. Many require that an applicant submit a supporting statement from their doctor or their social worker. In this tool, we have tried to take some of the research work out of the equation for people by collecting information and contact details for all the different organizations we know of. You can read a brief description of each one and then just click through if it sounds like it's something of interest. Do keep in mind that you may need to check back periodically. A lot of these funds open and close throughout the year due to the sponsoring organization's finances. Some of them, HealthWell comes to mind, and the PAN Foundation, they let you sign up for email alerts so that when the fund you're interested in opens up, you can be alerted. This is just what the home screen looks like. You can see a list of all the different categories of information. If you choose the financial assistance module homepage, this is what you would see. We encourage people to try and think creatively. Maybe you're looking for help because you just found out you're going to have lodging costs because you need to get care away from home. And maybe you look at all of the organizations in that category and none of them have open funds or none of them really apply for your situation. But maybe you're eligible for financial assistance instead with your utilities bills. So you can take the money you were budgeting for that and shift it over to pay for the lodging. Again, once you select a category within financial assistance, this case, it's general living expenses, you can see the specific organizations. We also have a module on cancer finances that deals specifically with managing prescription drug costs. I will just highlight a lot of people are aware of the existence of these programs because of copay assistance or the ability to get free drugs or vouchers. But often the people staffing these programs, even if you're not eligible for the financial assistance, they may have some good tips if you're having trouble with prior authorizations or billing or denials, because they are talking to people day in, day out who are trying to access the very same drugs that you are. And again, you can get details about the different programs using our Cancer Finances tool. In addition to all these private organizations, another financing option that we see people using a lot more of these days is crowdfunding. It can be an effective way to raise money through your family and friends, as long as you have thought through your feelings about being public, not only about your diagnosis, but about your overall situation. Also, make sure that if you are going to do crowdfunding, that you understand how any money you receive could impact eligibility for income-based programs, things like Medicaid or SSI. We have a quick guide that goes through some of the things to think about. I also encourage you to think broadly when you think about financial assistance. It isn't all about grants from private organizations or about crowdfunding. There are actually a lot of public programs that could be helpful. Every state has an unemployment benefits program. If you're able to work through your treatment or post-treatment, you might not be eligible for disability insurance, but you might be eligible for unemployment. Just keep in mind, typically, if you're applying for unemployment, you will be required to regularly certify that you're looking for work and ready and able to take work if it's offered to you. Another government program, Temporary Assistance for Needy Families, or TANF, which is cash assistance for families with children. Also understand a lot of times the same local office. So for example, your local Department of Social Services may oversee multiple programs. And it's possible if you apply for one, you may automatically be eligible for another. So for example, if you get SNAP benefits, what people think of as food stamps, you may also get TANF. SNAP, or Supplemental Nutrition Assistance Program, is the name of what we used to call food stamps. If you are hungry, if you know someone who is hungry, there are a lot of programs out there that can provide food. They include WIC, which is the nutrition program for women, infants, and children. There are healthy meal programs for school-age children. There are programs for seniors. There's a national hunger hotline. I want to also highlight feedingamerica.org, which is a really good website that can help you locate local organizations, local food banks, and food pantries. There are rental assistance programs. There are programs out there, actually I should say housing assistance, because there are even some programs to help homeowners. The U.S. Department of Housing and Urban Development is the federal agency that oversees a lot of these. They have counseling agencies that can walk someone through eligibility rules. Utilities assistance programs. A lot of people are familiar with LIHEAP, which is for heating and cooling costs, but there is also a low-income household water assistance program. One suggestion with these, a lot of times these programs have a set amount of money that is allocated to them each season, and once the money is gone, it's gone. So try and apply early. There are even federal programs that assist with things like phone services and internet access, and that provide discounts for purchasing computers or other devices. And the final kind of assistance program I just want to mention is with funeral and burial costs, which can be kind of expensive. The details on this slide are for a COVID-related program run through FEMA, but about 20 states offer cash for funeral or burial expenses. And some states that don't, their counties may offer this kind of assistance. I'm going to conclude by sharing that the Triage Cancer resource I use most often when it comes to financial assistance is this checklist. I like it. It runs through all the different categories that I just described, from private grants all the way through to public programs. So I find it helpful to just pass through it each time if I'm trying to work with someone to make sure I haven't left anything out. And with that, I want to thank everyone very much for tuning in for today's webinar. While I've been speaking, I know that my colleagues have been working on answering questions in the Q&A box. I don't know if any questions remain, but I will ask that now.
Our staff was able to get to all of the questions, Amanda.
That is great. So in that case, thank you again, everyone, for attending. And Sophia, I will give things back to you.
Thank you so much. And I would like to remind everyone that you can access a recording of this webinar. It will be up later today. If you navigate to triagecancer.org, click on the events tab and then past webinars, you will see our whole archive of webinars as well as resource documents pertaining to each specific topic. So thank you for joining our webinar. We hope that you will join our monthly webinar in the future. We will have a webinar on different topics each month for the rest of the year. And we also have other educational events that may be of interest to you, your loved ones, or your patients. Our apex event is the Triage Cancer Conference, which we offer biannually and free of charge to anyone interested in the topics listed on the screen. We also offer free continuing education credits and contact hours for healthcare professionals. And this is a day-long event that we will be offering on May 20th and October 14th this year. Now, we also understand and appreciate the role that healthcare providers play in changing the lives of those impacted by a diagnosis. And so to meet this need, we've created a insurance and finance intensive specifically for healthcare professionals. This is a day-long event that we will be offering 5 more times this year, 4 of which will be virtual, and 1 will be hosted in New Hampshire. You can register online, and we will be offering free continuing education credits and contact hours for healthcare professionals as well. And because there's never enough training for healthcare providers, we're also offering a free Navigating Cancer Work and Insurance in-service event. Registration is open for this event, and we'll be covering topics related to employment, ranging from newly diagnosed to taking time off to health insurance options. And we will be offering free continuing education credits and contact hours for social workers and nurses for this event. And I'd also like to remind you that our legal and financial navigation program is free, and you can fill out an intake form on our website. And this program may be great for you or for someone in your community if you need specific answers to a specific situation that either you are experiencing, your loved one is experiencing, or your patients are experiencing. You can fill out the intake form either in English or in Spanish directly on our website. Now, I hope that you found this presentation useful and that you'll continue to stay connected with Triage Cancer. We invite you to attend more webinars and to connect with us on social media. And we also encourage you to sign up to receive our blog. You can use the QR code directly on the screen to get the blog delivered right to your email so that you don't have to remember to check our website for the latest blog. And for the healthcare professionals on today, or anyone interested in distributing materials to your community, you can bulk order materials for free, and we will ship them to you for free utilizing the materials request form on our website. And as a last reminder, to receive continuing education credit for today's webinar, you must have stayed throughout the entire webinar, and you will receive an email following this webinar from Zoom, which will contain a link to the evaluation and post-test. Now, the evaluation requires your name and email address so that we can certify you completed the entire evaluation. And this is also the email we will use to send the certificates within 4 weeks. Now, please complete this evaluation and the post-test within 1 week of the webinar. And if you are a nurse or a social worker, you must receive a passing grade of 80% on the post-test in order to receive credit. And again, as I said earlier, if you are seeking continuing education credits and you called in with a phone, please email info@triagecancer.org. And if you have any questions, you can reach out to info@triagecancer.org. Now, if you see this message after you complete the evaluation and post-test saying you passed, thank you for completing the evaluation and post-test, then your submission has been logged and you passed. And if you receive a score that is less than an 80%, you will see this message, and it will include a link to retake the post-test, which can be accessed on our website on the post-test tab. You can copy and paste that link in your web browser. You don't need to resubmit the entire evaluation, just the post-test. And if you have any questions, you can reach out to info@triagecancer.org, and we can help you figure out whatever the issue is that you're having. And yes, unfortunately, CEs will not be permitted for those just watching the recording. You have to attend the entire webinar live. But thank you all so much for attending. We hope that you found the information useful and that you all have a great rest of your day.